The single most important thing for you if you want to be a profitable trader is having a profitable trading strategy, one that is proven. I've been trading now for over 5 years, and just yesterday I made $11,000 and I lost $2,500. And in this video, I'm going to break down all the trades that I took, why I took them, and the strategy behind the trades that I took. The first short position I called live in the exact moment that I executed that trade and sent it out to my inner circle students. And I updated it step by step as and when we updated each target level. And you can see here that a bunch of traders took this exact trade. Equally, the long positions that I'm going to break down in this session, I took live with my members on a live stream. I live stream every single day, New York session with my students. And we took both of these trades together. What we can easily see is the bearish candle reach down here and then start wicking back up, and we basically just get involved in the wick retracement. So right now I'm going to break down what the trades were and why I took them, most importantly. And from this video, you should leave here with a strategy of understanding how you can trade profitably consistently. So the first and most important thing that you should understand is the overall directional bias, the sentiment of price. We are very, very bearish. We're in a huge sell-off right here. So what do you think the first thing that I'm looking for when I open the market for that specific day? I'm most likely looking for shorts. As you can see here, this green candle here represents the daily candle at that moment in time. So you'll see this change. And this is a very important thing for me, because when I'm shorting the market in a bearish trend, I actually want to sell a bullish candle. You see, that sounds counterintuitive, but the truth is 90% of people, when they see this big green candle, they want to buy that candle. And if 90% of traders lose money, then you literally just will make money by doing the opposite. And the logic here is that you want to be selling when everybody else is thinking about buying. And so essentially what we can see here, number one, we're obviously selling off aggressively from yesterday. We come into the market and there's a few very important things you need to see here. We have Asia session low down here, and we have equal lows at Asia session low. This is also the current low of the day. So we have the low of the current day and we have the lowest point of the previous day. The first thing I'm doing when I come into the market is I'm building narrative. I'm an intraday trader. I want to understand what's going to happen in this one specific day, in this one specific session, and how can I get involved in that? And everything is screaming towards lower prices. We're bearish. We've traded above Asia session high. We have a bullish daily candle. We have Asia low that's untapped. We have equal lows at Asia low, and we have previous day's low that's aligned with relative equal lows with the current low of day. So everything is screaming out to go for shorts. The second thing I need to do is I need to wait for confirmation. You see, it's one thing having a bias, a narrative of price, but then you actually have to allow price to confirm your bias for you. A big mistake that I see traders face is they're always trying to predict the market, and they're trying to get into the market before the market has even showed them what it's going to do. That's a big error. You need to let the market show you and then just react to what it shows you, instead of trying to be a genius and think that you can predict every move. That's why 90% of traders lose. Even smart money concept traders are losing because they're trying to predict price. Have a bias, absolutely. Have a narrative in mind, but this is still data that the market is telling me. I've literally sat in thousands of daily sessions on euro dollar and watched the price action. I understand the behavior so well. I know that there is a very high probability that we are going to revisit these lows in this session. And so let the market first decide what that's going to be. So as we approach my session open, which is 2 a.m. Eastern Standard Time, I use the 15-minute time frame to give me my bias, the 1-minute time frame for my entries, so I can get a super sharp risk to reward ratio, precise entries, and obviously confirmation. So what the market tells me already before London even starts is that the reversal has started. You can see here that throughout Asia and heading into Frankfurt, we have aggressive buyers holding up the market, pushing price higher. Buyers are really in control. But then something happens. We reach a certain point, aggressive buying stops, sellers are now all of a sudden in control of this price point, and then aggressive buyers step back in, push sellers out of the market. Sellers try again to push price lower, and once again they fail, and aggressive buyers push price higher. They even have another small little move in here where sellers try to push price lower, and they fail, and buyers push price higher. So we can see here that clearly buyers are in control of this market. They are willing to buy up price higher. Therefore, price is going to trade higher. Supply and demand, standard economics 101. So we're pushing price higher. Now, eventually what happens is we do reach a point where sellers have a lot more of a say in price. And it does push past all of these buying participants. And specifically for me, the important part is we break this low. And so this for me is a change of character. This is essentially the first signaling sign that we are moving from being bullish and buyers in control to bearish and sellers in control. But I need to wait for my specific session to occur. Again, I'll quickly show you. I have hundreds and hundreds of trades of data on my model, right? We're talking 807 trades that have been executed across these two different systems. This isn't just random price action. This is a complete repeatable model that I have seen play out hundreds of times. So I know what I'm waiting for. And what I'm waiting for is for London session to open and a continuation below this low. If I get that, that is my green light. London opens with a huge sell-off. Now, in part, this obviously has something to do with CPI data that was released from GBP USD. But for me, it doesn't matter. I just need to understand the direction of price. So what we're seeing here is we're seeing an area of price with all the other context, right? I believe that this daily candle is going to turn bearish. We're off the back of having, 4 or 5 bearish daily candles in a row. We're just putting in more lower lows. When price goes like this, before we go and put in a lower low, it has a pullback. We put in a new low, we have a pullback. This low is just waiting to be taken out. That's all this low is. This daily candle will likely flip to bearish. It happens time and time and time again. Instead of forcing it, I'm just waiting for the confirmation. So now at London Open, I'm looking at taking this trade. And I'm going to the 15-minute time frame. And the area that I want to take this trade is the supply range, right? You can quite clearly see here that the bulk of transactions took place in this level. Now, what many people think is that this huge high volume candle has so much orders inside of it. And whilst that is a possibility, it doesn't necessarily mean that it's the truth. A lot of the time, the majority of the volume from traders comes at the area of price where we actually are in a range. And when you have these large moves, there are less passive buyers because the market maker is willing to step out. And then it shows definitely who is in control of the market, which is sellers. But what I want to see is I want to see price come and revisit this area, because in this area, all of the buyers and sellers that were active at this price point may still be active at this price point. There may be sellers that want to defend this position. There may be buyers that want to look at trying to get back into the market. There may be buyers who want to close their position and mitigate their positions. And so really what I'm thinking in my head is I want to now get involved in this move. And I believe that sellers are going to defend this price point. If we get back into here, sellers will defend this because they don't want to close these positions and they don't want to lose their money. And they're in control at the moment. So I'm on the side of the market that's in control in the present moment. I'm in alignment with the overall narrative of these lower prices, right? Don't forget the higher time frame intraday narrative. I am in alignment with the current order flow of price. Now it's just a case of placing the order and letting the market do what the market's going to do. And you can see I put my stops above this high, so 3.9 pip stop loss, relatively small. My first target is down here at the lows, which is a 3.64 risk to reward, not terrible. My second target is 1 to 5 risk to reward. Now, you may be asking why 1 to 5 risk to reward? Like I said, over the years and years that I've collected data on my edge, I understand that with the win rate that I have, meaning how many trades that I win, of the trades that I take, a 5 risk to reward is the most profitable that I can have. So sometimes it's fixed, sometimes it ends up being a target, right? And again, there's still 2 more trades that I need to break down here, but this is a good start. So what we can see here is we have that 15-minute candle, and almost immediately we come straight back in here and we tag in. Price is relatively easy to trade through this level, no problem. Now we reach the supply level, right? The area of supply. I'm expecting this to hold. That's where I get into the market. We tag in. We move out. At this point, I'm recording the video for my members. So a lot of my members are able to get into this position. Now, notice what happens here is that we start coming higher into this price leg. And what do 99% of people do? Most people, and you've probably experienced this with your poor psychology, price starts getting deep into their drawdown level and they start panicking. They start worrying. They start thinking about offloading this position. Maybe I'll just close the position early so I don't have to realize such a large loss. You start getting doubt. Price is definitely going to hit my stop loss. Look how high it's come. And for a lot of times, that's what kills people. But for me, I have the context. First and foremost, I have the context of understanding who's in control of the market. I have my daily narrative and my daily bias. On top of that, I also actually have the dollar index. So here I am on the DXY, and the DXY helps a lot because it gives you that kind of cross-reference narrative. So if we look at the DXY, it tells me a completely different story. Right now, euro dollar is almost at the stop loss, but the DXY isn't. The DXY gives such a cleaner story. The DXY tells me that we had these equal lows that we were looking at yesterday. We sweep these equal lows, we take out this high, we come in here, we have a rundown, we have a manipulation, we have an initiation, we shift the highs in here, we have a really nice fair value gap in here, and most importantly, the 15-minute candle is closing above the fair value gap. The next 15-minute candle comes with a bullish one. Now you look at this price leg, just down here, as we were creating this 15-minute candle, euro dollar is almost at its stop loss. For me, I am not worried at all. I know that this DXY candle is very likely going to flip into a bullish one. When this fair value gap is holding like this, I know that euro dollar is going to hold the level that it's at. And so I'm able to use the dollar index to give me an extra layer of confirmation on this specific setup, which is what I did. So back to euro dollar, we're almost at our stop loss, and then price starts reacting in here. 90% of traders who trade smart money concepts lose money. They think that the concepts are superior. However, the reality is it's how you read the market. Smart money concepts were designed to basically take institutional level concepts, dumb them down a little bit, and then give them out online. So what you're seeing as smart money concepts, this idea of this superior BS that a lot of people push. Again, I trade smart money concepts, but I'm not naive. I don't believe in all of the BS banks and algorithms and stuff. I understand, how the market is actually operating, the real market mechanics. And smart money concepts does actually explain those things when you understand them with narrative. So a lot of people think that, pattern recognition from smart money concept is what's going to make them money. Wrong. You have to understand what's happening to be able to make the best decisions. And over the next 8 weeks, I'm going to be actually breaking down a full smart money concepts guide from beginner to advanced over the next 8 weeks on this channel. So if you haven't already, subscribe and click the bell notification to be notified so you don't miss those episodes, because they're going to be the most valuable work that I've done on this channel. So here's what's going on right now. This is what you guys aren't reading. It's the level of detail. You guys are just worried. You're seeing this up and down price action and you're just shaking in your boots. You're just an emotional wreck watching price go down and your heart rate's fluctuating everywhere and you don't even know what to do with yourself, right? That's most traders. For me, I understand what's happening. I understand we've come back into this level. I see the DXY. This sideways price delivery for me is a good sign. What it's telling me is that buyers keep trying to attack this level that I'm at. And every time, sellers are just holding them off. That tells me that there is a big market player at this level who is defending this price point. And at some point or another, what's going to happen is the buyers are going to realize that they can't push price past this level, and they're most likely going to give up. And they're going to try to stop taking price past this level, and the buyers are going to realize that they've become exhausted, and the buyers are going to close their positions. And what happens when a buyer closes their position? It comes through as sell side liquidity. And so it makes it easier for the price to move lower. Buyers will step out and they will close positions, and it makes it so easy for price to move lower. So I understand this and what's happening, but most people are just shaking their boots when price is just ranging. And most people, by the third time we're sitting in here, it's like, oh, price hasn't run straight to my take profit. I'm just going to close my position because it's going to hit a loss. And they just close it here. And they're like, okay, the fear's gone, the anxiety is gone, the worry is gone. And then you just watch price move off into your level. And now all of a sudden you start beating yourself up. Or you get into these points and then price starts reversing back up here and you start closing your position early. A lot of people have psychology problems, but I understand. I know this daily candle with a good high probability is flipping to a bearish candle. I need to wait for that. So you can see, right, look at that daily candle. There you go. That daily candle was bullish and it's just flipped into a bearish candle because all it's doing is continuing in the overall direction that we've already been in. But something interesting happens at this point. You see, like I said, I have two trading strategies, two models that I have built with years of data. So what happens now is we go and look and we take our different positions. So London session begins to get ready for its end. I'm out of my position. A lot of the traders in my community here have also taken this exact trade because they followed me step by step. Now I'm waiting to go live with my members for New York, which is 7. So New York Open is starting right now. So we are all the way down here. Now, again, I'm dropping too much sauce here, but I'll give it anyway. You see how bearish that daily candle is? right? Exactly here right now. Well, I understand that a market likes to gravitate towards mean reversion. After a large sell-off, I've built an edge on playing a pullback. After you get a very aggressive bearish daily candle like this, it's actually quite common for this daily candle to then start having a pullback and retracement back up to around its midsection. So I understand that this daily candle, we're down here right now, is probably going to have somewhat of a pullback. And I've built an edge off of getting involved after we're so heavily overextended toward the sell side to play the retracement. The objective of the market is essentially to be at an equilibrium. It wants to be a balance. And so for price to be in balance, again, that's where most orders are going to be transacted inside of the price range. The least amount of orders are executed on the edges. The most amount of orders are executed in the middle. And so a lot of the times price wants to revisit this level to test this level because there is liquidity in the middle of the price range and price wants to revisit that liquidity. The further we come outside of the price leg, essentially the larger we're coming outside of its comfort zone in some sense. And a lot of the times it will retest the point in which it was, and then maybe it will continue, sure. But a lot of the times it will want to retest that midsection. And I've literally built a model on that. But again, like I told you, I allow the market to show me that it wants to do something before I try and act on it. In New York session, the first thing that I wait for is a liquidation. So I need to see this low get taken out. And then I need to see a reversal. So I come in here now, I'm on the 1 minute time frame. Again, you can see we're very aggressively bearish, right? We take these lows and then we take these highs. That for me is my sign that now could be the time that we go revisit this midsection of price. I'm looking to place my order on the 5 minute time frame. And I want to just play a small pullback like this, 1 to 3 risk reward. All I'm playing is the likelihood that we're going to have some kind of rebalancing in New York. Maybe we then get a continuation. Maybe we get a follow through. I don't know. I don't care. I'm just playing this kind of mean reversion. After a heavy sell-off, we have some type of continuum back into kind of a mean reversion. And then maybe price goes lower, maybe price goes higher. I don't know what will happen after that, but I know that I'm able to get involved in this. And so this day became a game of ping pong for me. You can see here, this is the position that I went to take. I got into this trade. It started running in profit. It reversed, turned around, and then smacked me, and then took out these lows, which was quite unfortunate. But that doesn't dishearten me. I know my model. Now again, it becomes a waiting game. I play price out. What happens? We come lower once again. Now, instead of trying to just jump into the market, this could keep falling all day long. It happens. There are some days where London session just expands in one direction and we have a New York continuation. So if I just keep trying to long here, I will get brutally beaten up. What I need to do is wait for the first sign that maybe we have a New York reversal. Again, one of the models that you will see time and time again in this market is if New York goes in one direction, we'll have the middle of New York and then New York will open and New York will give us a reversion. And so we have London expansion, New York reversal. It's a common model. Another common model that we can have, a London expansion, and then a New York continuation. So I've built a model on the latter. Again, look how bearish this daily candle is, right? I know that at some point in time, it's likely gonna have a pullback. So I'm just waiting. Now what happens here is we breach this high. And so what I technically need to see, price break and close above this high. That's what I want to see. The fact that price has wicked this level and started reversing is a bad sign for me. So at that point, I'm not in the market. But then I see price revisit this level again. And again, it rejects and it does have a rejection. But at this point, I've seen that this high should be technically accepted. And each time price has come into this level, it's failed to protect this level. We've had a sell-off, but we've then fished above the high again. And then once again, we reach toward this level. And so for a lot of people, this level looks like it's acting as an area of resistance. For me though, what I'm seeing is that buyers are persistent. Buyers are persistently testing this level. We've broke out of it once, we broke out of it a second time. Bearing in mind, I already have all my other narratives in play, guys. I'm already looking at the daily candle. I'm expecting probably some type of mean reversion. And so for me, again, it is a small position. I want to play that narrative. And so I'm getting into the market and I want to protect my sell side. I'm not asking for a lot. I just need 3 risk to reward, 3 times my risk to make this profitable. Price is at a very aggressive sell-off. It's still selling off. All it has to do is have some level of relief into here 3R. What happens after that? I don't care about it. I literally could not care. Done. Job done. And then what ends up happening is this actually ends up shifting back to a bullish candle. Now, did I know that? No idea. How many times does this happen? It's fewer than it closes bearish. So again, that's another thing I see that traders make the mistake of. They look at this and they're like, oh, I could have had a 1 to 9 risk to reward if I would have just held it. Yeah, but you didn't know, right? It's a hindsight game. If you want to be one of the people who are with me day in, day out, literally trading these moves with me like my other members are, and you want access to the playbooks and years of backtesting data that I have on these proven strategies, and you want them and you think that's what's going to help you achieve your goals faster, then below this video I'll leave a link, check it out, and hopefully you become one of our Prosperity School members.